The final type of order we'll talk about is stop limit order. A stop limit buy order is used to buy in when the market is moving up. Choose the coin you want at the top. Now I'm going to give you an example. I want to buy 200 Doge. The current market price is around 13 cents. However, I don't want to buy it now. I want to buy it when it starts moving up, let's say 14 cents. In that case, for the stop limit buy order, I will set the stop price as 14 cents. And I will set the limit price slightly above at 14 cents and a half. This means that if the price starts rising, my Doge will be bought between 14 cents and 0.145 cents. A stop limit sell order is used to limit losses or protect gains. For limiting losses or protecting gains, you need to set a stop limit sell order. The stop price is the price at which the order starts getting executed. The limit price is the lowest price you're willing to sell it at. For example, I have 200 Doge. The current market price is around 13 cents. In case the price starts falling, I want to sell it, let's say, 12 cents. So, in stop limit sell order, I will set the stop price as 12 cents. And I will set the limit price slightly below at 11 cents and a half. This means that if the price starts falling, my Doge will be sold between 11 and a half cents and 12 cents.